Hello, all my dear students. I hope you all are doing good. Sir, we are starting with our final direct tax fast track batch for 2023. It will be completely in English. We have already started with our D batch, the English batch, but this is generally for those students who want to completely opt for a full English batch, 100%. So, this is a fast track batch. This is not a regular batch. There are two types of batches every year. One is regular batch. We have regular batch also. One is fast track. So I'll be giving you a brief idea about what exactly we are going to do in the next few days, next few months in fact, cannot be completed. What exactly we are going to do for the next few months in this fast track. So the first thing which I would like to tell you all, I would like to confirm you all that this batch is fully updated for your 2023 exams. Okay. Fully updated. It is as per the latest Finance Act 2022, which is applicable for your exams. The relevant Finance Act for your exams is Finance Act 2022. The second thing which I would like to tell you all is this batch covers each and every topic which is relevant for your CA final exam. We do not try to skip any topics over here. Just because it is a fast track batch, we will try to skip certain topics. No, it's not like that. We will be completing all the topics that we do in regular batch. There will not be a single topic which I do in regular batch and I do not do in fast track. Yes, the way in which I cover that will be different. Because in regular batch, it will be in very detail. Here, it cannot be that much detailing. I have to reduce the detailing of the explanation that I do in fast track batch. In regular batch, I have a lot of time. Thirdly, this fast track batch is not only a theory batch where I will come, I'll teach you provisions and I'll go. No. Here also we are going to equally practice lot of questions. Not as much as we do in regular batch, but yes, sufficient. Sufficient for you to understand the concepts. We will be doing a lot of questions over here. So you have to be absolutely not worried about anything regarding the batch. You just follow the things which I am saying and you will be through in your direct tax paper. Don't worry about it. Okay. Just believe me, keep faith in me, trust me. That is what I want from you all. Okay. Now, what all things you are going to get? And what will be the duration? So, approximately the duration will be around 115 to 120 hours, 5% here and there would be fine. 115 to 120 hours, 5% here and there. That is something which is very possible. So, what all material that we are going to get, sir? We are going to get 3 books, 2 textbooks, colored books. We have named those color books as easy notes. That is our terminology of calling the book as easy notes. So you have 2 volumes of easy notes, which is a colored book, beautifully drafted, beautifully made for your exams. Can you show us? Yes, you already have got the hard copy. I'll just give you a glimpse of that, all those who don't have the book. So this is the book which is there in front of you. Okay. Easy Notes, Volume 1. I'll just speak about few salient features of this book before we can get into, because we should know how to read the book before we read the book. Before we start reading the book, we should know that what are the salient features of the book and how to read this book. These 2 volumes, approximately 500 sides, approximately 500 pages, covers the entire CA final syllabus in very detailed manner also. It covers entire syllabus, don't worry about it. Okay, it has been drafted with great precision. And it has been drafted with an experience of last 11 years in CA final direct tax teaching. It has not been drafted with an experience of 1 or 2 years. So last 11 years I have been looking at 22 papers of CA final direct tax. In that also multiple attempts, there are new course papers also, old course papers also. So more than 22 papers I have seen. By looking at that, I know which provisions are targeted where, which provisions are not targeted much. Keeping that thing in mind, this book is drafted. First thing is this. Second thing, this book will also be available for sale later on. That I'll be discussing later on. I am not interested in that because this is a fast track batch. You already have got the book. But in case your friends want the book, they can get this book. It will be available for sale later on. Thirdly, this is a colored book, completely colored book. We have used various colors for different identification. Like you can see, students have a habit of underlining important things in their books. You don't have to do all those things. That I have done. Okay. Apart from that, if you find anything important, then you can definitely underline that. So if a student find anything important, it is already highlighted in form of red. Then Finance Act 2022 is relevant for your 2023 exams. All the Finance Act 2022 amendments are already in green. If a student wants to read only amendment, he can come to the amendment and read it. Third, case law. All the case laws are colored blue. So that if a student wants to refer a case law separately, they can refer case law separately with blue color. Section numbers. Section numbers are colored in purple. So that if a student wants to remember a section number, they can definitely remember it. And the main content is given in black. So black is the main content. In that, red tells you the important points so that you can refer that and revise the thing very fast. And the rest of the color will give you different identification of different aspects. This is how we have designed the book. Apart from that, we have also given a detailed index in the book that which provision is there on which page. We have given a detailed index, not topic wise, but we have given a detailed index concept wise. Check which concept is there on which page. It is not a topic. Topic is profits and gains from business and profession, but that is not which is mentioned as a page number. In that also we have mentioned the subtopics like where is additional depreciation? It is here. It is here. Where is it? It is on page number 2.4. All these things saves a lot of time of the students, and my duty as a teacher, as your mentor, to save your time. Maximum time I can save, maximum time we have to save, and maximum content we have to provide in minimum time. Minimum time, maximum output. That is our objective. That is our objective. Okay. Apart from this, questions we are going to do from question bank. Don't worry. And there is a question bank over here for you all. We will be doing this question bank. Obviously not entirely. It's a very huge and very vast question bank. But we will try to cover maximum questions to the extent it is possible. I like to tell you very clearly. I don't try to play any gimmick with my students. I am very straightforward. I will not be able to cover that many questions as I cover in regular batch. In regular batch, I cover more than 300 to 350 questions in class. I'll not be able to do that much. Okay. But yes, important topics I'll definitely cover. So, how the question bank is designed? The question bank is designed with lot of precision again. How? First of all, you will get all the topics as per the ICAI study material. Okay. And you will get all the ICAI questions over here, which will be trying to solve over here. Then, if you come to chapter number 32 on the board, you will get Finance Act 2022 practice question. Okay. If you come to chapter number 34, 35 and 36, you will get past RTPs, past mock test and past ICAI papers. We'll try to solve some of them also. And if you go inside a topic, then all the questions are given star category. Because on the day of exam, a student cannot solve all the questions. Depending upon the time, they will select the question and they do not know which to select, which not to select. So there are 3-star questions, there are 4-star questions, and there are 5-star questions. 5-star questions are must do before exam. 4-star questions, if time permits, do. 3-star question, ignore. Ignore 3-star questions on the day of exam. So therefore, all the questions are done with starring category. Entire book is done with star. This is a 4-star question. This is a 4-star. 4-star. First chapter does not have a 5-star question. Yes, second chapter has a 5-star question. So every question is done as a star, which is important for you, which is not during the day of exam. This is the level at which we try to provide the service to our students here. This is our commitment towards our students. Okay. So this is how we are going to go about. I would like to again tell you few things that we will be covering the entire syllabus. Don't worry. Obviously, not in the detailed manner as we do it in regular batch, but yes, it is sufficient for exams. Okay, it is relevant for exams. So, without wasting any further time, let's start the chapter. First of all, I would like to give you some brief introduction about the subject. Okay, I'll do some brief introduction and then we will start with the topic. Okay, pay attention. We all know that under income tax law, that income is divided into how many heads? 5 heads, right? Income is divided into 5 heads, right? Which are the 5 heads? And where it is written that the income is divided into 5 heads? It is written in section 14 for your kind information. For your information, section 14 tells us that income is divided into how many heads? It is divided into 5 heads. Okay. So section 14 does the classification of income. Now starts the heads. First, section 15 to section 17 talks about salary. Section 21 to 27 talks about house property. Section 28 to 44 DB talks about PGBP, profits and gains of business and profession. Section 45 to 55A talks about capital gains. And section 56 to 59 talks about IFRS. So this is how the income is divided into 5 heads. And where it is written? It is written in section 14. That income will be divided into 5 heads. And then start section 15 and then it ends with what? Section 59. Okay. Now the most important thing over here is how a person will come to know that whether his income is coming under salary or HP or PGBP or CG or IFRS. How will he come to know? How will I come to know that my income is under which head? For that, we need to read the first section of every head. This is section 22 to 27. Sorry. The first section of every head tells us that you will come under which head. Like, if there is an employer and employee relationship, then you will come under salary. Where it is written? It is written in section 15. Like, if you are an owner of a house property and the house property is building or land appurtenant thereto, and it is not used for business and profession, if you fulfill these 3 conditions, then you are covered under income from house property. Where it is written? It is written in section 22. So, when you will come under which head? That depends upon what? The first section of every head. The first section of every head tells you when you will come under that head. So, similarly, when you will come under PGBP, that is written under which section? That is written under section 28. When you will come under capital gains, that is written under section 45. When you will come under IFOS, that is written under section 56. So, when you will come under which section, that will be written in the respective head's first section. And that section is called as the chargeability of that head. When your income will be charged under that head. When your income will be covered under that head. That is what the first section of every head tells. So, today our first duty is to understand section 28, because the first topic which we are starting today, which is a big one, the most important one, that is PGBP. Section 28, the charging section of what? PGBP. And in PGBP, in section 28 also, there are 2 types of charging section. Let me tell you, there are 2 types. We'll be doing one type today, one type after some lectures. There are 2 types of charging section in PGBP. Let me tell you what are the 2 types of charging section. First is general charge. And second is special charge. General charge is given in section 28(1), section 28 clause 1, and special charge is given in section 28 2, 3, 4, 5, 5A, 6, etc., etc. We are not interested in that, but I'll just explain you the difference between the 2. General charge gives you certain conditions, you have to fulfill that, your income will be covered under PGBP. But if you do not fulfill that condition, then you cannot come under PGBP. So, for that purpose, they have made a special charge. All those cases that cannot come in general charge because they are violating some of the conditions of general charge can go under special charge. I'll be giving you the examples later on. I'm not interested in that as of now because that will be a lot of interlinking too early. It's just first 15 minutes of the subject. You will take time to get used to the subject. So we are interested today in general charge. Sir, what does general charge says? So let's see what does the general charge says. Pay attention please, all of you. On page number 1.9, 1.1 sorry. What does the general charge says? As per section 28.1, general charge says that profits and gains from business or profession which was carried on by assessee at any time during the previous year is charged under what? PGBP. So now our duty is to fulfill these two lines. If you fulfill these two lines, your income is covered under PGBP. That's it. Only this much you have to fulfill. If you fulfill these two lines, your income is covered under PGBP. What all things we have to fulfill? We have to find out what is business. Point number 1. We have to find out what is profession. Point number 2. We have to find out what is profits and gains. Point number 3. We have to find out carried on by assessee. Point number 4. And we have to find out at any time during the previous year. Point number 5. If you guys want to underline and highlight, you can do so. So the first thing that I am interested here is, what do you mean by the term business? I will be targeting one by one all the points. And these are all debatable points. You'll come to know in the next half an hour how debatable this concept is. That what comes in charging section, what does not come in charging section. If you want to get covered in PGBP, you have to fulfill these two lines first. In case you don't fulfill these two lines, then there are certain special charging sections that we'll see later. But at least first of all, try to cover in general charge. If we do not fulfill the general charge, then we'll talk about special charge. General charge. Sir, what do you mean by the term business? Is the term business defined under income tax law? Yes, it is defined in section 2, clause 13. It is defined in section 2, clause 13. How it is defined, sir? Let me tell you. Business includes, it's an inclusive definition. It's not an exhaustive definition. There are two types of definitions which are there in law. One is exhaustive, which will tell you business means. When you see the word means, it means it's an exhaustive definition. When you see the word includes, it means it's an inclusive definition. Inclusive definition will always be litigative in nature, will always be disputed in court because those are not complete. Those are just inclusive lists, illustrative lists. Those are not complete in every manner. Therefore, the income tax law has played a gimmick over here by giving the definition of business as what? Inclusive. They are not exhaustively defining business. They are telling us the list which is covered in the definition of business. Let's see. Business includes what? Trade, commerce, manufacture in the nature of adventure. So business is trade. Buying and selling is trade. Business is commerce. When you do trade at a very large scale, at a national and international level, that same trade is called as what? As commerce. If you trade in a larger scale, it is commerce. Manufacture, everybody knows what is that. You have to buy a raw material and out of that raw material, you develop some product that is manufactured. Therefore, business includes what? Trade, commerce, manufacture. But there has to be some kind of adventure in that. What do I mean by adventure? There has to be some kind of risk in that. Every business has some risk. The intensity of the risk might be low or high, but a person cannot say that I do a business which is risk-free. It is absolutely impossible to say this statement. A business cannot be risk-free. A business can be low risk, high risk, medium risk, but it cannot be risk-free. So there has to be an adventure in the nature of what? Trade, commerce or manufacture. Whatever trade, commerce or manufacture you are doing, there has to be some adventure in that. That's it. This is a small definition, so litigative. This does not give any conclusive evidence to us. So there are plethora of Supreme Court judgments which speaks about different definitions which are given by different courts regarding what is business, what is business, what is business. Some court is saying business includes this, some court is saying business includes this, some other court is saying business includes this, Supreme Court is saying business includes this. There are thousands of definitions on what is business, what is not. We have picked one of them. One of the famous judgments by the Supreme Court in the case of Barendra Prasad Ray, which held that business implies a systematic and organized activity of applying labor and skill with a dominant intention of earning profits. So this is held by Supreme Court in the case of Barendra Prasad Ray. You can see over here in blue. You can see over here in blue. The Supreme Court held in the case of Barendra Prasad Ray that business is nothing but systematic and organized activity of applying labor. You are doing some systematic, some organized activity of applying labor. Some workers are using of applying skill. You are applying your mind with a dominant intention of profit. Profit motive is very important. Therefore, what is business? What is not? It's all a issue of facts and circumstance. Depending upon the facts and circumstance, you have to decide what is business, what is not. There is no thumb rule of what is business, what is not. Income tax law does not give any exhaustive definition. And there are plethora of judgments. Based on the facts and circumstances of every case, you have to decide. In exam, you don't have to decide all those. Because sitting in an exam hall in a closed room, you cannot be given with so many facts and circumstances. But in practical life, it's a very litigated matter. Now coming to what is profession, the second point over here. This is more pathetic definition as compared to what the definition of business. The definition of business at least had something to speak. This has nothing to speak. As per section 236, profession includes vocation. It is as simple as this. It's a one-word definition. As per section 236, profession includes what? Vocation. So you will ask me as a student now, what is vocation then? Define vocation. Vocation is not defined under income tax law. For that, you have to go to dictionary. So what is vocation? Vocation, if you go to dictionary and see, it means some occupation requiring some skills. Any occupation requiring some skill is a vocation. Like a doctor is an occupation which requires skill. Chartered accountant is an occupation requires skill. Lawyer is an occupation requiring skill. There is the certificate, degree, etc. required? No. To call anything as profession, there is no need for any certificate or degree. Amitabh Bachchan, Rajinikanth, do they have any certificate of acting? No, they have skill. Virat Kohli, Sachin Tendulkar, do they have any certificate of playing cricket? No, but they have skill. Skill is important. So any occupation requiring some skill can be called as vocation. And if it can be called as vocation, it can be called as profession, because profession includes vocation. So again, a very pathetic definition, nothing great as such. The government does not want to define. If they define it, then the litigation will close. They don't want to close the door. They want to keep it open. So what comes in business, what comes in profession is always a matter of facts and circumstance. Just go through it and then we'll go ahead. So now, there are some debates which we have to solve. When the income will come under, listen carefully, what are the debates? We will try to solve all of them. When the income will come under PGBP and when the income will come under CG. There is a very thin line of difference between the two. When the income will come under IFOS and when the income will come under PGBP. We are trying to understand the fight between two heads. It's not that easy to classify an income. Please try to understand. The way you think that it's very easy to classify an income into a particular head, it's not that easy. It's a very complicated task. When which income will come under which head of income is it's a matter of great discussion. And you have to look into the facts and circumstances very minutely. So we are going to fight between two heads now. Which two heads? The first head will be PGBP, obviously. So we'll fight. We have a fight between PGBP and CG. We'll have a fight between PGBP and IFOS. We'll have a fight between PGBP and HP, house property. Okay. So we'll have a fight between these heads. The first fight which we are doing over here is between PGBP and CG. So when your income will come under PGBP and when under CG. So like, there was one associate over here. Listen to the facts and circumstances from my side and then you can read it from the book. Just wait. There was one associate who has a huge land. So he wants to sell the land. So it was not getting sold. Somebody told him that if it's not getting sold, then you make small plots and then sell. People will buy. Nobody will buy such a huge land yet. So to sell the plot, the entire land of hundreds of acres, he has divided that land into various parts. Okay. So now he is selling the plots. The plots which he is selling, he is taking the money from the customers, from the buyers. So obviously he's having some gain by selling that small plot. Where that gain will go? Department was saying that it will go to PGBP. Assessee said that it is not a PGBP. It is not my business to buy land and sell land. So the department said that no, it is PGBP. Assessee said that no, it's capital gains. It's a long-term capital gain. So give me indexation also and give me what? Lower tax benefit also. Because in capital gains, the tax rate is 20% for long term. So what do you feel? What is it? Is it a PGBP or capital gains? You have to think at your end. Is the assessee doing any kind of business over here? No. And therefore, it is a capital gains. Supreme Court held in the case of Suresh Chandra Goel. Capital gains. It's a capital gains income. As against this, there is one assessee. Issue number 2. The second issue. First issue was what? Assessee had a huge land, so it was not getting sold, so he divided the land into plots. And now he's selling the land in plots. That is a capital gains income. The court held. Second issue. Assessee has a huge land, and on that huge land, assessee is constructing a colony. He is making residential complex, offices, theaters, malls, hospital, hotels, so on and so forth. And then he is selling it. Is it a capital gains or PGBP? First of all, he is buying a land and making a complete complex. And then he is selling it. Is it a PGBP? Yes, it's a PGBP. It's a systematic and organized activity of applying labor and skill with a dominant intention of earning profits. Check. Yes, here there is an adventure. Here there is a risk. Here the intention of the assessee is to do business, is to apply systematic and organized activity of labor and skill with a dominant intention of earning profits. Yes, it is a business. It is a PGBP. Okay. Next. The first thing that comes to our mind when I say interest income, what does come? Which head comes to your mind when I say interest income? The first thing that comes to our mind is IFOS. Interest means IFOS, yeah. Interest means IFOS. We do not come to any other head apart from IFOS when it comes to interest, but it's not like that. It's not like that ever. It's never ever like that. Interest can be covered in IFOS also. It can be covered in PGBP also. It is written in the law. That depends upon in what context you are receiving the interest. Are you receiving the interest in business context? Yes. If it is received in business context, then it is PGBP. If it is received in not in business context, but it is received in independent context, then IFOS. Let me give you an example. If I have idle money I have kept it in the bank and getting some interest. IFOS. Second example, listen carefully, it's very important. I want to take a government tender. Government is opening a tender to make roads, to construct metro trains. So I want that contract from government. Now because I want that contract from government, the government is telling me you have to give a bank guarantee of 10 crore rupees. For that you have to make an FD in State Bank of India of 10 crore. I said I am ready. As a security you have to give to the government that you will complete the contract on time or not. So I said I am ready to give you 10 crore rupees ka bank guarantee. I am ready to give you 10 crore ka FD. So I opened a 10 crore FD in the bank. That is my FD only. Just to give guarantee to the government. So that 10 crore rupees FD which I have kept in bank so that I can get the contract of business, I am getting some interest from that. Is this the reason? Am I investing in the FD to earn interest? No. Here my interest earning is not the main activity. My activity over here is closely related, is inextricably linked. I am using a technical word, inextricably linked with closely linked. It is closely related to the activity of business. And therefore, in such case, where you have made an FD so that you give a bank guarantee to get a business contract, can be classified under what? Under PGBP. Because that entire objective of making that FD was not to earn interest, but to get a business contract. And therefore, it can be classified under what? It can be classified under the head PGBP. Check. It's a very important issue. So, a High Court judgment, Delhi High Court, K and Company. Check. Next. Don't read. I'll tell you, then you read. Then you go through. I'll be speaking each and everything which is there in the book. I just don't speak anything which is out of the book. Because whatever I speak has to be there in the books. Ultimately, after 3 months, 4 months, when you will give the exam, at that time, My bhashan will be of no use. My speech will be of no use. What is there in the book will be of use. Okay. So whatever I speak has to be there in the books. Otherwise, it doesn't make sense for me to speak over here unnecessarily. Next issue. I have a plant and machinery, or I have a furniture which I am letting out. Where it will go? So I have a plant and machinery, I have furniture, I have car, which I am letting out. I am getting some rent out of it. Where will it go? Sir, IFOS. It's IFOS, sir. We have read it in C enter. We have read it in C enter, right? It is IFOS. If you let out facility, then IFOS. If you let out house, then house property. Okay. But is it so that always if you let out facility, then it is IFOS? The answer is no. Listen carefully to this issue now. I have a factory. Now that factory, I was doing some production over there, and there was some lockout in my factory. There was some strike in my factory. And because of the strike, what happens? My factory is closed down now, is locked out. And I know that it will be locked out for the next 3-4 months at least. So what I thought, I applied my business mind. And I know that this matter is not going to be resolved in next 3-4 months. So what I did is, I gave my plant, machinery, furniture on rent to someone for a temporary period. By applying my business mind, that at least I will get some money out of it, yeah. So I gave my plant, machinery, furniture on rent to someone. I gave my facilities on rent to someone. And I earned some rental income out. So that at least that will cover my wear and tear of the machinery, yeah. Otherwise, if the machineries are kept like that, they will be what? They will be stopped. They will not work. And that is the reason I gave that plant, machinery, furniture on rent to someone for temporary period. I earned some rent. Where will it go? Will it go in IFOS or PGBP? And the answer is PGBP. See, the Supreme Court is saying in the case of Lakshmi Silk Mills Limited, the Supreme Court is saying that the businessman has applied his business mind to earn some money out of it. It's his business intelligence, technically known as business expediency. Business expediency means business intelligence. How well you react in business. How well you think in business. So this is what the assessee has done. He has thought well. He has thought like a prudent businessman. Therefore, the income from let out of facility, which otherwise could have earned him PGBP income. If everything was opened, everything was okay, then he would have earned PGBP out of it, that plant, machinery, furniture. So if it is closed, then why the hell he cannot earn? He is earning out when it is closed also. He might be earning slightly lesser money. He might be definitely earning slightly lesser money as compared to what he could earn from manufacturing. Obviously, from manufacturing, he can earn more than that, what he is earning from let out. But at least he is applying his business mind now to earn some money out of it. It says business intelligence, it's a PGBP income. Great. Great. Okay. Next one is also a very, very, very important issue. Listen carefully. I have a warehouse. I am giving on let out that warehouse to you. I have a warehouse which I am giving on let out to you. Where will I take that income? That income will be taken in the head house property, sir. It's very simple. It's very evident. It's without any second thought that warehouse income will go to house property. Without any second thought, anybody would say that particular thing. But now listen. The second example. I have a warehouse which I am giving to you along with lot of facilities now. Like fumigation service. Like pest control. Like security service. I am doing all these things for you. I am not only giving you a place. I am giving you a lot of facilities along with the place. The security is also mine. The pest control is also mine. The fumigation service is mine. All of them is mine. Where will it go? It will go in PGBP. Check. NDR Warehousing Madras High Court has held that. Because they are giving a lot of services. Fumigation services, security control, etc. etc. Check. So what will come in business? What will not come in business? It's a matter of great discussion. It's a matter of great litigation. It's a disputed matter. In reality, there are a lot of disputes which are pending with respect to this issue. Now, obviously, 90% of the case, assessee would say that I would like to come to PGB. 90%. I'm not saying 100% of the case. 90% of the case, assessee would say that please take me in PGBP. Why? Because in PGBP, there are great deductions. That is the reason assessee would love to come in PGBP. Any assessee would love to come in PGBP. Any assessee. Because there are great tax benefits. So obviously, if everybody will come to PGBP, then who will go to other heads? That will be a revenue loss to the government. So government has brought chargeability for everything. But that chargeability is not very strong. It's not very clear. That chargeability section 28, which we are learning now, is itself in a lot of questions. So what comes in PGBP, what's not come in PGBP? It's a matter of great discussion. Let me give you a few more examples. 3 examples more I am giving. First, I have a house in which I stay. But apart from that, I have many other houses as well, for example. And I gave that house on let out. From that, I am earning some rental income. Okay. Now, where will that rental income go? That anybody will say that will go to income from house property, sir? Definitely. That will go to income from house property. But I would like to give you second example. Now, I am not an individual. I am a Lodha builder. Builder who makes building and does what? Sell building. Listen to my words carefully. Lodha builder makes building, constructs building and sell building. So assume that I am a Lodha builder who constructs building and sell building. Okay. So if I am a Lodha builder, if I make building and sell building, okay, then what will be my income? It will be my PGBP income. Okay. Now just assume that suppose I have made a building of 100 floors, out of which 50 floors are sold, 50 are unsold. 50 are sold, 50 are unsold. Listen carefully now. This is very important discussion. This is a building of say 100 floors, of which 50 are sold, 50 unsold. And who am I? I am a builder. So now if this unsold flats, I am not able to see that because it is not getting sold. So I let out that and I earn somewhat rental income out of it. Where will it go? It will go under the head house property. Why? Why house property? Because there is a specific head for house property. There is a specific head of income from house property and that will always go under house property. That cannot go under PGBP. Why? Because Lodha's main business is not PGBP. Lodha's business is not PGBP. There is a very thin line of difference between the two. Lodha's main business is not to let out. Lodha's main business is to make a building and then business is not to let out. Therefore, such income, the unsold flats which a builder has, I'll say that 7 times. The unsold flats which a builder has will always be covered under what? Will always be covered under income from house property, not under PGBP. Please be very careful. Now, as against this, there was one assessee who does what? Who purchased a building. And then after purchasing the building, he wrote in his memorandum of association. He's a company. It's a company that my main objective is to let out. They have written in the memorandum of association that their main objective is to let out property. Plus, their substantial income comes from let out. What? Their substantial income comes from let out. My main objective is what? My main objective is to acquire property and let out. Let out is my main objective. Not to sell like Lodha. Where will it go? Where will the let out income go? Supreme Court had that this is the PGBP income. This is different from what Lodha is doing. Please be very careful about this and please be very. There is a great difference between the two. The Supreme Court has held it's a very important case. In this case, if it is written in the memorandum of association that the main object of the company is to acquire and let out immovable property and income from such activity is substantial, then the income from such activity shall be taxable under PGBP instead of what? Instead of house property. Be very careful about it. A very important issue. So again, I am giving you the 3 example. If I have a what? Empty house. and I am letting out house property. If Lodha is having unsold flats, house property, Lodha's job is not to make and let out. Lodha's job is to make and what? In Lodha's memorandum of association, is it written like that? That Lodha makes the building and then let out the building? No. In Lodha's memorandum of association, the main objective is to let out, is to construct and sell. Therefore, if Lodha is letting out, HP, the way it is HP for me. But if any entity is acquiring a building with an intention of letting out and writing in the memorandum of association and substantial income also coming from let out, then that income will be considered as what? As a PGBP income and not as what? As a HP income. So what is business? What is not? It's a matter of great discussion. It's a matter of great litigation. A lot of disputes are there in that. Be very careful about it. Okay. Now, so this is what the great litigative discussion is all about. What comes in business, what does not comes in business, what comes in profession, what does not comes in profession. It's a matter of great discussion. So point number 1 and point number 2 we have done. So let's come to the point number 3 now. So I am not saying that you are done completely. Huh? Nobody knows completely point number 1 and 2. Even I don't know, even government don't know what is point number 1 and 2. Because it is very litigative. Tomorrow some new issue will come. You have to look into the facts and circumstances of every case in the practical life and decide what comes in business, what not comes in business. Okay. Coming to point number 3, profits and gains. You have to earn profits and gains. So there are some characteristics of profits and gains. Let me tell you what are those characteristics. There are 4 characteristics of profits and gains which as a student you have to keep it in mind. First of all, profits and gains must be revenue in nature. Page number 1.3. What should be the nature of profits and gains? It should be revenue. It should not be capital. For capital profits, we have made separate heads. Capital gains, go over there. It should be revenue in nature. It should not be capital in nature. So capital profits are not covered here. What do I mean by capital profits? One-time receipt, not covered here. For example, here it is given. Suppose the supplier was supposed to supply me some machinery and he did not supply the machinery to me on time. So he has to pay some compensation to me. So will that be taxable? It will not be taxable because it's a one-time receipt. It's not a revenue receipt. It's a capital receipt. And capital receipts are not chargeable in 28.1 at least. It cannot be charged in 28.1. What is covered is only revenue profits. Be very clear. Second, profits may arise from legal or illegal business. If you are doing a legal business, yes, it is subject to tax. If you are doing an illegal business, that is also subject to tax. Why we are going to spare you? For example, in Gujarat, selling alcohol and liquor is illegal. But if you are still selling it and you are getting caught, then we will take tax from you. Please remember that I am not promoting illegal things, nor the government. Nor am I saying, nor the government is saying that do illegal things and pay tax to us. No. They are saying even illegal activities will be subject to tax if it is caught, obviously. If it is caught. Now, every illegal business is not caught now. If the government is catching anybody doing any illegal business, if they come to know they have earned some profits out of illegal business, you have to pay tax on that also. Third, profits may arise in cash or in kind. It doesn't matter whether it is in monetary or non-monetary terms. It doesn't matter. If it is monetary, then also taxable. If it is non-monetary, then also taxable. Both the cases it is taxable. Monetary profits are also taxable. Non-monetary profits are also taxable. So what all things I have said? Profits may arise from legal or illegal business. It may be cash or kind. It must be in revenue in nature, not capital. And last but not least, the most important point of the profit. Profit should be or must be real profit. If you want to charge a PGBP income in section 28.1, your profit has to be real profit. Real profit means it has to be real. The sale has to be real. The expenses have to be real. It cannot be notional. It cannot be anticipated. It cannot be deemed. So if you want to charge a PGBP income, then the profit has to be real profit. Yes, it has to be real profit. Otherwise, it cannot be charged in 28.1. But sir, we have done in practical life that in some cases we take 8% of the turnover as profit, or 6% of the turnover as profit, or 50% of the gross receipt as profit. Yes, you have done that. So that is not real, that is notional. Those are overriding sections. That is covered in 44 AD, 44 ADA. Those are overriding. Those override all the provisions of PGB. Those are notwithstanding sections. I have also written over here, check in the bracket. Those are exceptions. By default, your profit has to be real profit, real profit, real profit. But yes, your profit can be notional in certain exceptional cases, where your turnover is up to 2 crore, etc., etc., where your profession's gross receipt is up to 50 lakhs, etc. Those are exceptional cases. Those are special sections. Huh? Those special sections override section 28, 29, 30, 31, 32, all the PGBP provisions. So yes, there are certain notional sections, but those are special sections. Legally, we are absolutely correct. There is nothing wrong in the legality of the provision. Both are absolutely correct at that place. Okay. If you want to cover, that's the PGBP income. By default, but yes, it can be notional. Yes, in certain exception cases, in some conditions, it can be notional also, like in 4480. Okay. So this is what the characteristics of profits and gains is all about. It must be revenue, not capital. It must be real. Sorry, legal or illegal, cash or fine. Coming to the next part of the charging section, which was carried on by the assessee. The business has to be carried on by the assessee. So what do I mean by the word carried on by the assessee? It means the business will be controlled by the assessee. Business has to be under the control of the assessee. What happens in case of non-resident, you know? Suppose if a non-resident is doing business from out of India, so there is one agent they have to make sit in India. One agent has to be sat in India, who will work on behalf of them, will complete all the formalities that the NR is supposed to do in India. So who is doing the business? The agent is doing? No. Business is done by NR. Who is does it? Assessee is NR who is controlling the business. Assessee is not an agent. Agent cannot be called as a. It is the businessman who is sitting outside India, NR. That is the person who is doing the business. So for one who controls the business will be called as what? Will be called as what? Carried on by the assessee. And last but not least, it should be carried out at any time during the previous year. So business should not be carried out for the whole year. It should not be carried out for 365 days. It should be carried out for some time during the previous year. Even if it is done for some time during the previous year, it is sufficient. Further, it is not necessary that the business should be done in AY also. You have done the business in PY, you have earned profit. In AY, the business is closed. That is all fine. That is a part and parcel of the business. It happens. So, continuation of business in AY is not necessary. What is necessary? You should do the business in PY. That's it. That's it. This is what your charging section is all about. Profits and gains from business or profession carried on by assessee at any time during the previous year. Let's go through it once and then we'll go ahead. So once we come to know what comes under PGBP, what does not comes under PGBP, the next step as a taxpayer should be to compute the income. Now, how to compute income? For that, section 29 is there, and section 29 says that you have to follow section 30 to 43D. That's it. It's a very simple answer. In such a simple words, they have given the answer. Such a big question it is that how to compute a PGBP income, they have given in a very simple line. They say that study section 30 to 43, you will come to know how to compute PGBP income. Okay. But before that also, before doing all this thing, what is there in section 30 to 43D? In section 30 to 43D, mainly there are PGBP disallowances and PGBP deductions. Mainly, it is about only that. It talks only about these two things. So these are the things which are there in what? In section 30 to 43D. So even if I learn the entire disallowances or the entire deductions, what will I achieve? I will achieve nothing. I want a PNL before that, so that I can make the adjustments. What should I add? What should I reduce? What should I ignore? So how to make a PNL? Because all these PGBP deductions and disallowances are of no use without a PNL. So how should I make a PNL? What should be my format to make a PNL? So let me talk about that first today. Okay. So let me talk about that. How to make a PNL? That is given in section 145. 145 talks about the manner of making PNL, and in that there are three subsections. Subsection 1 says You can follow books of accounts. You can follow the method of accounting, either mercantile or cash. You can follow both, but you have to follow regularly. Whatever you are following, follow regularly. You cannot change on a year-to-year basis. In one year, you are following mercantile. In another year, you are following cash. In another year, again mercantile, then again cash, then again mercantile, then again cash. You are not supposed to do that. You are supposed to follow what? Only one of the method. You have both the options, but follow regularly. Don't change every year. Second subsection tells you, if you follow mercantile system, then you have to follow an accounting standards notified by CBDT, which is what? ICDS. You have to follow income computation and disclosure standards. Earlier, we used to follow accounting standards given by ICAI, given by our institute. But now, we are not supposed to follow the institute's accounting standard in tax. In tax, we are supposed to follow the ICDS given by CBDT. Okay. So, subsection 1 tells you, you have two options, mercantile, cash, but regularly. Subsection 2 tells you, follow ICDS. Subsection 3 tells what? Subsection 3 is something which tells about assessments, which you may not understand properly now. Later on, we'll be doing, but still I'll say once. Subsection 3 says that if you do not follow subsection 1 or 2, if you violate subsection 1 or subsection 2, then the assessing officer will do best judgment assessment of yours. Will do what? Will do best judgment assessment of yours. Best judgment means what? That's a very harsh assessment. Don't get into the trap of best judgment assessment. Don't violate subsection 1 or 2 here. Don't do such things in life where you have to bear the consequences of subsection 3. Don't do that. Follow regularly, whichever method you want to follow regularly. Follow ICDS properly, nothing will happen. If you violate any of the conditions, subsection 3 is waiting for you. Check. So here completes your PGBP chargeability. Okay. And also how to compute PGBP income. You have to follow which method, so on and so forth. Okay. Now our task will start. Which task? The bigger task, that is deductions and then disallowances. So first we'll be doing deductions in the next few lectures, including today's lecture. And then we'll be doing with disallowances in the further lectures. Okay. So today we are going to talk about first of all deduction. So first of all the deductions under income tax law are covered under section 30 to 37. These are the 8 sections in which all the deductions are covered. Okay. So I have segregated all the deductions into 2 categories, section 30 to 36 and 37. So what is the difference? 30 to 36 talks about specific deduction. Specific means it comes with a name, like bad debt, like depreciation, like rent, like interest. But the government cannot give you an exhaustive list of all the expenses now. So they have to stop somewhere. So where they stop, there starts 37.1. That is general deduction. If your expense cannot come over here, then you have to come over here. If your expense cannot be covered in specific deductions which are mentioned by the government, so then you have to go, you have a last option. Last hope is 37.1. So first you have to check your expenses covered in 30 to 37 or not, 30 to 36 or not. If it is covered in 30 to 36, well and good. If it is not covered in 30 to 36, then go to 37.1. In 30 to 36 also there are 2 segregations. Some deductions are available to all means every kind of assessee, and some are available to certain sectors. Some benefits are available to all assessees, like depreciation to all, like rent expense to all. But you would have done certain sector-wise deduction in CA Inter also, like scientific research deduction only to assessee engaged in scientific research. That is sector-wise. Or a hospital of 100 bed or a hotel of 2-star category. Those are very specific deductions which are applicable only to certain businesses, not to all. So you have to keep this segregation in your mind, first of all, before you learn PGBP deductions. Then it will become easier for you. You cannot just start from section 30, 31, 32, 33, 34 in the order. No, you have to learn in a logical way. Then you'll be able to understand the things in a better way and you'll be able to memorize the things for a longer duration. So, we will be doing all these things one by one. So, today, first thing which we are starting is section 32, the big one, that is the depreciation deduction. Okay. Now, these things we'll be doing later. I've written also, see later. There are special charging section, as I've told you earlier also. That in charging section, there are two types of charging section. One is general charge, one is special charge. Special charge I'll be talking after some lectures. I'm not interested in that today at least. Coming to the chapter of depreciation. So the first deduction that we are starting in CA final, direct tax fast track batch, is the discussion on depreciation. It's a long discussion. It's a big topic. It will take time for us to understand this entire chapter. So have patience. Please, beta. Please have patience. The first thing that we all need to know is the types of depreciation. There are four types of depreciation under income tax law. First is the normal depreciation under the block scheme, which is covered in section 32, subsection 1, clause 2. This is the first depreciation. Second, additional depreciation under the block scheme, which is covered under section 32, subsection 1, clause 2a. Third, SLM depreciation for power generating units. If you want to write a full form, you can write there. 32, subsection 1, clause 1. Fourth, terminal depreciation for power generating unit. 32, subsection 1, clause 3. Now, I'm not interested in these three as of now. I'm interested in the first one as of now. 95% of my discussion will be on this first one only. 95% discussion. 95% discussion on first one and rest of the 5% discussion on the remaining three. Remaining three are not that big. I'm not saying it is not important. It is important, but not that big. 95% discussion on the first one. So what does the first one say? Okay. Normal depreciation under the block scheme. Section 32, subsection 1, clause 2. Now, what is the block scheme? We'll be talking about the block scheme, and this is a WDV method. This is not an SLM. SLM is year. Year. This is a WDV method. Now, what is the block scheme? Block we'll talk about after some time. First of all, let me tell you a few conditions to claim depreciation. There are some conditions which you have to fulfill if you want to claim depreciation. First condition. If I want to claim depreciation under the income tax law, I need to be the owner of the asset. Unless I am the owner of the asset, I cannot claim depreciation. So what do you mean by the term owner? Unfortunately, the term owner is not defined under the income tax law. Unfortunately. If it would have been defined, I would have told you. It is not defined, unfortunately. So if you want to claim depreciation under the income tax law, you need to be the owner of the asset. Owner means, I don't know. So we have to go to Supreme Court. And the Supreme Court held in the case of Mysore Minerals Limited, a landmark judgment. Supreme Court has given us the test stone to identify what is owner and what is not. So what happened in this case, in the case of Mysore Minerals Limited, that the assessee bought a building. Okay. And after the assessee bought a building, he started using that building for business. He has also made the payment to the other person, to the seller. He has done everything. But the property was not registered with the registrar of stamp duty authorities. The property was not registered. But has the assessee got the possession? Yes, assessee got the possession. Has the assessee paid the money? Yes, assessee has paid the money. Is the assessee using the building for business? Yes, the assessee is using the building for business. What was the only thing which did not happen? Was the property was not registered. So assessee said that property is not registered. That is a mere formality. We will register in next few months. Just because the property is not registered, you cannot say that you are not the owner. I have paid the money. I am using the money. I have got an NOC from the seller also that you can use the money, that you can use the asset. I have all the right of the asset. So the Supreme Court came into the picture and said that even though the word owner is not defined under income tax law, but for the purpose of income tax law, the term owner means a beneficial owner and not legal owner. One who is reaping benefits out of it is an owner. And you are not an owner. Seller is not an owner. Buyer is an owner. Buyer is reaping the benefits. Buyer has paid the money. Buyer has using the asset. Buyer has taken the NOC. Buyer has taken the possession. Or kya chahiye? What else do you want? What else do you want? Therefore, in such cases, the asset will be allowed to be depreciated in the hands of the buyer, and the Supreme Court has given a landmark line What is relevant under income tax law is beneficial owner and not legal owner. Beneficial ownership is relevant and not legal. Accordingly, registration, title is all irrelevant to determine what? To determine ownership. So now, after determining what is ownership, what is not, the next issue is with respect to. So ownership we have decided. Owner means what? Again, I am saying owner means for the purpose of income tax law, beneficial owner and not legal owner. Registration, title, all of them are irrelevant to determine ownership. Now, coming to two small things. In case of lease transaction, who will claim depreciation? So the government has said that in a CBDT circular that in case of lease transaction, it is the lessor who will claim depreciation. The lessor will claim depreciation. The person who is giving the asset on lease, that person will claim depreciation. Okay. It has been explained through a CBDT circular in 2001. So now the next question is, in case of hire purchase transaction, who will claim depreciation? So in that case also, CBDT has given a circular long back in 1943. 1943, they have given a circular which says that in case of hire purchase transaction, it is the hire purchaser. It is the hire purchaser, the buyer. That buyer will claim depreciation. Okay. So in case of lease transaction, it is the lessor who will claim depreciation. In case of hire purchase, it is the hire purchaser who will claim depreciation under the income tax law. Now there is a very interesting issue over here, a very important Supreme Court judgment, which is very important for exam as well as for practical life. Now let me tell you about that. Pay attention, please. There was one company, car leasing company, who used to give car on leases to customers. Now, the lease which was given by the company was a long-term lease. So, suppose let's take an example that I am a car leasing company and you are a customer and you want a car from my company for a long-term purpose of say 3 years or 5 years. So, what happens? You come to me and you demand for a particular car of a particular brand and we go to the market, we buy that car and we give that car to you for a long-term purpose for 3 years, 5 years, 6 years. Now, when we give this car to you, the registration is done in the name of the customer. Why? Because that is the requirement of Motor Vehicle Act. The Motor Vehicle Act says that when you give a car on lease on long-term purpose to any person, then the car has to be registered in the name of the customer. Definitely at the end of lease period, you will take back the car. Then you can retransfer the car in your name. But when you give the car for a long-term purpose, you have to register in the name of the customer. You cannot register in your name. So I bought a car. I am a leasing company. I gave that car to you and the car is registered in your name. And then I as a company claim depreciation on that car. The assessing officer started saying that you will not get depreciation. I said, why? He said, you are not fulfilling the two conditions, two basic conditions to claim depreciation. I said, which one? He said, to claim depreciation, one need to be owner. Second condition, one need to use the asset. And the assessing officer is claiming that I am not fulfilling both the conditions. Assessing officer is saying that you are not the owner. The owner is the customer because in the registration certificate, the name of the customer is written. I went to Supreme Court. I went to Supreme Court and I said Supreme Court that this is what the assessing officer's stand is. The Supreme Court said that the ownership is in the name of the customer, not in the name of the customer, but it is in the name of the assessee itself. It is just for the temporary period during the lease period. It is the requirement of the Motor Vehicle Act that the ownership has to be in the name of what? In the name of the customer. It is very evident, it is very clear that at the end of the lease period, the customer is supposed to give back the vehicle to the what? To the company. That itself shows that who is the real owner, who is the beneficial owner. And what has to be seen is the beneficial owner and not the owner on paper, registration, title, all of them are irrelevant. Therefore, the owner is the customer is a wrong argument made by the government. So the Supreme Court said that no, the customer is not the owner, the leasing company is the owner. The second condition, which the assessing officer is saying that the company is violating, that the company is not using the car. The Supreme Court said to the assessing officer, are you a fool or what? If a assessee is engaged in car leasing business, that assessee himself cannot drive the car. Use of car does not mean actual usage. Use of car does not mean that the steering should be in your hand. Use of car means that the car should be used in the course of the business. And what is the business of the assessee? Leasing. In the business of leasing, I cannot drive car. I have to lease car. So leasing the car itself can be called as what? Using the car for business. And therefore that condition is also fulfilled. And therefore the assessee is the owner. The assessee is using the asset. He should get the depreciation. Therefore, there can be a lot of litigations like that in practical life. So one of them, which is there in your syllabus, I have discussed over here. So what do you mean by the term owner? Owner means beneficial owner and not legal owner. And use means not actual usage, but in the course of business. So coming to the second condition, what do you mean by the term use for the purpose of depreciation? So the government has clarified over here, use means both active use as well as passive use. For example, this laptop which is there in front of me, this camera which is there in front of me, it is actively used for the purpose of my profession. But I have kept one camera in spare. I have kept one laptop in spare. Why? In case this doesn't work, then that can be used in emergency. So something which can be used in emergency is called as passive use, which is ready for use. So something which is ready for business use can also be called as use. Use does not means active use. Use will also include what? Passive use. Okay. And one last thing over here. Suppose if I am not able to use machinery because of machinery, plant, furniture, whatever it is, if I am not able to use my asset because of some extraneous reasons, then the government will give you depreciation on that machinery. For example, I bought a machinery and I am ready to use. But the material, raw material which is to be used in that machinery is in shortage in the market. So I have bought the machinery, I have installed the machinery, but the raw material is in shortage. Then what will I do? So because of the shortage of raw material, I am not able to use the machinery. So will I be getting the depreciation? The government has said that if the plant and machinery got ready for use but could not be put to use due to some extraneous reason, example shortage of raw material, then depreciation would be allowed under section 32. It would be allowed. So use means what? Active as well as passive. Both use. Passive use means what? Which is ready for use for emergency purpose. Last but not least, if you cannot use a machinery because of extraneous reason, then the depreciation would be allowed to you. Okay, just go through it and then we'll go ahead with the next part. So now coming to the discussion of block. What is block exactly? Block, concept of block actually was brought by Dr. Manmohan Singh in AY 88-89, around 32 years back, 34 years back almost. In AY 88-89, the concept of block was brought. In PY 87-88, it was brought. So what is a block? In block, what happens? First of all, you have to follow WDV method in block. Please be very careful. In block, they have categorized all the assets into 5 categories. All assets have to be in 5 categories. First, plant, then machinery, then building, then furniture, and then the 5th one is intangible assets. So these are the 5 categories in which the block is categorized. Why? For ease of calculations. Because individually calculating asset or depreciation of each and every asset is a very tedious task. So we want to calculate depreciation on what basis? On a block basis, on a group of assets taking together. So all similar assets will come together under a common block. Okay. So what are the categories? As I have told you, plant, machinery, furniture, building, and intangible assets. So what are the rates of depreciation for that? We'll see that. By default, if nothing is mentioned in the exam, then plant and machinery will be depreciated at 15%. Okay, 15%. If nothing is mentioned, then furniture will be depreciated at 10%. And if nothing is mentioned, then building will be depreciated at 10%. And intangible assets will be depreciated at 25%. You have to keep these rates in your mind. They will not give you these rates in the exams. You have to by heart them. So plant, machinery. Plant and machinery, let's group them as one asset only. That is fine. Plant and machinery you can say together. So plant and machinery 15% by default. Furniture 10%, building 10%, intangible asset 25%. But there are some multiple rates now. Like for building. For building there are multiple rates. Like if it is a residential building, then it is 5% depreciation. And if it is a temporary structure, then it is 40% depreciation. For residential building, it is 5% depreciation, and for temporary structure, it is 40% depreciation. How much? 40%. You can check over here. Okay. Residential building 5%, temporary structure 40%. Coming to now plant and machinery. In plant and machinery, there are multiple rates. I'll tell you one by one all of them. First, I'll tackle with motor car. Motor car by default, if nothing is mentioned, 15%. Second, if you are in the business of running them on hire, your business is of running motor car on hire, like Ola, Uber, like bus services, etc. Their business is of running the motor car on hire, so they will get 50% extra. That is for them, it is 30%. So by default, motor car will be depreciated at 15%, but if the business is of running them on hire, like Ola, Uber, or bus services, etc., then 30%. Further, multiple rates are there. Further rates are there in motor car. If you have purchased motor car between 23rd of August 2019 to 31st of March 2020, see this date. If you have purchased motor vehicle between this period, 23rd of August 2019 to 31st of March 2020, if you have purchased between this period and used between this period, you have to purchase and use both. Then you will get 15% extra. So the 15% depreciation rate will become 30 and 30 will become 45. You will get 15% extra. So by default, motor vehicle 15%. If they are running them on hire, then 30%. If you have purchased and put to use in this period, then 15 will become 30 and 30 will become 45. You will get extra 15%. Okay. Computer and its peripherals will be depreciated at 40%. Its peripheral means printer, scanner, etc. These are its peripherals. 40%. Mobile phones, sir. Mobile phones 15%. Mobile phones are not computers. EPBX 15%. Sir, what is EPBX? Intercom telecom system which is kept in companies. If you go to big company, there are intercom system in that where you can call from one desk to another desk. Okay, by dialing certain numbers. So that is EPBX. That is depreciated at 15%. Mobile phone 15%. Okay. Ships will be depreciated at 20%. Aircraft will be depreciated at 40%. Professional books will be depreciated at 40%. Windmill at 40%. Pollution control equipment at 40%. You can see all of them in point number 5. Windmill 40%. Professional books 40%. Aircraft 40%. In pollution control equipment 40%. But ships are 20%. So these are the rates which are you have to by heart as a student. They will not give you an exam. So you have to remember these rates very carefully. Be aware of this. Okay. Now, there is some concept of half depreciation, full depreciation also under income tax law. The concept is very straightforward. Listen carefully. The financial year which is applicable for your exam is financial year 2022-23. This is applicable for your 2023 exams. The Finance Act which is applicable for your exam is Finance Act 2022. Now, what happens under income tax law is if I purchase and use a asset for less than 180 days, then the rate of depreciation will become half. 10 will become 5, 15 will become 7.5, 30 will become 15, 40 will become 20, so on and so forth. Your rate of depreciation will become half. But this half is applicable when you have to be very careful. This is applicable when you purchase and use in the same year. And it is used for less than what? 180 days. Exact 180 days, full depreciation. It has to be less than 180 days to make it half. So less than 180 days half or greater than equal to 180 days full. But this will become half. Now listen carefully, which you should be knowing it. Otherwise, I say I will play a game with you. So if you purchase and use in the same year, and if it is used for less than 180 days, it will become half. But suppose if you have purchased year and not used, but in the next year, that is in 23-24, you are using, and in the next year if you are using for less than 180 days, then what will happen? Listen carefully now. This is the place where students can make mistake. If you purchase and use both in the same year and it is for less than 180 days, then it will definitely become half. But if you purchase in 1 year, do not use, then you will not get depreciation here because you have not used it. Using is one of the conditions to claim depreciation. But if you have purchased the depreciation, if you have purchased the asset, okay, and using the asset in the next year for less than 180 days, then it will not become half, it will be full. Because the condition of becoming half is it should be used for less than 180 days in the year of purchase only. It means in the year of purchase, if you use for less than 180 days, it will become half. But if you purchase in 1 year and put to use in the next year, even for one day if you put to use for next year, then also it cannot become half in the next year, it will be full in the next year. Be very careful about it. Check this particular point. This is very, very, very important point. This point. It becomes half when an asset is acquired and put to use in that previous year for less than what? 180 days. If you put to use for less than 180 days in that previous year, in that means what? In the year in which you acquire, then it will become half. Therefore, if an asset is acquired in 1 year but put to use for less than 180 days in the next year, then it won't become half in the next year. It won't become half in the next year. It won't become half in the next year. Check it, please. Very important issue. If you want, you can take a photograph of this also. Okay. Okay. So when it will become half, when it will be full, it's very, very, very important. Now, coming to this particular point again, to this box. Intangible asset. Intangible asset will include lot of assets, but it will not include goodwill. Goodwill from which year? From financial year 2021. Write down here. Before financial year 2021 till 1920, depreciation on goodwill was available. But from financial year 2021, government has stopped the depreciation on goodwill. They are not giving depreciation on goodwill anymore now. So just 2 years back, they have stopped it. Be very careful with this date. From which year it is stopped? Till financial year 1920, it was allowed. And from financial year 2021, it is not allowed. You can write it like this. Okay. Earlier it was allowed, now it is not allowed. Now, coming to the tangible assets once again. So, is the term building defined? What do you mean by building? Building is not defined. I don't know what is building. Government has not defined the term building. Sir, is the term furniture defined? Furniture is not defined, unfortunately. I don't know what is the meaning of the term furniture. Sir, is the term machinery defined? I don't know. The term machinery is not defined, unfortunately. Sir, is the term plant defined? The answer is yes. Out of all the 4 terms, the government has only defined one term, and that is plant. So, what do you mean by the term plant? Let's see. Plant is defined in 2 manners. One is inclusive and one is exclusive. Both are mentioned in the definition of plant. So what is plant? Plant includes what? And plant does not include what? Okay. Plant includes what? The government has given some illustrative list. Plant includes ships. Ships are plants. Vehicles are plants. Books are plants. We have to classify somewhere books. Books cannot be called as furniture. Books cannot be called as building. Books cannot be called as machinery. Books can be called as plant, the closest possible answer. So government has given an illustrative list to us. Scientific apparatus is plant, surgical equipment is plant, all these things are plants. But plant does not include what? Certain things. You have to keep those things in mind. Tea bushes, you are literally taking the meaning of the term plant. You are taking plant, or you are talking about tea leaves. You are giving a literal meaning to the term plant. The term plant does not include tea bushes. It does not include livestock. Livestock are not plant. It does not include building, furniture, fitting, because these are separate assets. You cannot call all of them as plant. Actually, the meaning of plant is not given over here. They are just giving us inclusive and an exclusive list. So what happens in practical life? If I go to dictionary and try to find out the meaning of plant, it means any apparatus or tool which is necessary to discharge any function. So if any apparatus or tool can be called as plant, then this pen can also be called as plant. This laptop can also be called as plant, and furniture can also be called as plant, because building and furniture also is apparatus to necessary to discharge business functions. So in that way, so everything will become plant only. So the government does not want everything to be called as plant. Why? Because then everything will be depreciated at 15%. The government want the building and furniture, etc. to be depreciated at what? 10% only, not at 15%. Okay. So there is a great logic behind it. I'm not getting into so much of that logic. It is a very old discussion of 2003. Okay. So you need to be understanding that out of all the assets, only plant is defined in a very slightly manner, not in exhaustive manner, but inclusive and exclusive manner, whereby they exclude tea bushes, they exclude livestock, they exclude building, they exclude furniture and fitting, so on and so forth. Okay. Now, to claim depreciation under block method, you have to fulfill two conditions. Now, you will not understand the two conditions just by reading it, so I'll give you some example. You have done it in C enter also, but we are not assuming anything what you have done in C enter. The block of asset must be positive on the last day. That is, the amount column has to be positive. Okay. The block must not cease to exist on the last day. That is, the quantity column should not become what? Cease to exist. It means it should not become zero. Now, what do I mean by this? Pay attention. I'll give you an example. Suppose there is a furniture which is depreciated at 10%. The opening WDV of the furniture is say nil. This is amount column, this is quantity column. Quantity is also 0. So I purchased two furniture at 2 lakh rupees. Okay. Now I have not sold anything. So this will be nil, this will be nil, this will be 2 lakhs, this will be 2. So you have to fulfill two conditions. On the last day, the block must be positive. Is it positive? The answer is yes. This box is ticked. On the last day, the block should not be ceased to exist. It means the block should not become zero. At least one asset has to be there in the block. This box is also clicked. It is ticked. Now let's violate this one by one. Suppose if I sell one asset, then one will be pending for 3 lakh rupees. Suppose if I sell one asset for 3 lakh rupees, then it will become what? 1. This box is ticked, but this will become 1 lakh negative. So this box is not ticked. You cannot get depreciation. Because you have to take both the boxes, amount also and quantity also. Okay. So if I sell one asset for 3 lakh, then the quantity will still be there 1, but the block will become negative. You cannot claim depreciation in that case. Second, suppose if I sell both the assets, then it will become 0 for 1 lakh rupees. So now the amount is positive. This box is ticked, but this box is not getting ticked. This is getting 0. Again, you cannot claim depreciation under the income tax law. Because to claim depreciation, your block has to be positive. It means the amount column has to be positive and the quantity column cannot become 0. If it becomes 0, you will not get depreciation. I hope it is clear to all of you. Is it clear? I hope it is clear. And the last thing which I am doing it for today, that's it. After that, I'll stop my today's lecture at least. And that is it mandatory to claim depreciation? Yes, it is. You have to mandatorily claim depreciation under the income tax law. There is no option behind it. You have to mandatorily claim it. Otherwise, what people do, they don't claim depreciation. Why, sir? Why a person will not claim depreciation? I'll tell you. Because if you claim a depreciation, then your asset go to block of asset. You have to put the asset in the block now. Once the asset goes to block now, when you sell now, your gain will always become short-term capital gains. You might have done in C enter. The block of asset gain is always short-term. There you have to bear higher consequences of tax. Plus, indexation benefit is not available. So some people say that we don't want depreciation. Government say that it is not an option. It is mandatory. You have to claim. Okay. So this is how we are going to go with the batch. Very slow. Fast track does not mean that it is going to be very fast. It will cover all the concepts. Don't worry, which is relevant for your exams. Don't worry about it. Okay. I'll just recap once whatever we have done today so that we have a firm grip on the chapter. So we started with charging section today. Okay. With PGBP, which says that general charge we have done, special charge we have not done, special charge we'll be doing in the future lectures. So general charge says what? Profits and gains from business and profession carried on by associate any time during the previous year. What do you mean by the term business? Business includes trade, commerce, manufacture in the nature of adventure. Second, business as per Supreme Court in the case of Barendra Prasad Ray means a systematic and organized activity for applying labor and skill with the dominant intention of earning profits. That is business as per Supreme Court. Then, what is profession? Profession means vocation. Vocation means any occupation requiring some skill. Then we did some issues. Suppose if I have a huge land, then I sell it, then capital gain. Suppose if I have used land and I construct a colony, then I sell it, then PGVP. Suppose if I get interest from bank FD because I have taken that to take a tender, then it is PGVP. Suppose if I let out plant and machinery because there is a lockout in the factory, then it is PGVP. Suppose if I let out go down along with lot of facilities, then it is PGVP. Suppose if I rent my house, then it is HP. Suppose if Lodha rents the house, then it is HP. Suppose if a person who rents the house, then because it is his business to acquire property and let out the property, it is written in the memorandum, it is also a substantial part of the business, then it is PGVP. Then coming to profits and gains, has to be revenue, has to be real, has to be from legal, illegal, has to be in cash or kind. Then the business has to be carried on by assessee, means it has to be controlled by the assessee. And it has to be done at some time during the previous year. Entire year, it is not relevant. In AY, if it is conducted or not conducted, is of no use. Then we started with how to compute PGBP. You have to follow 14 section 30 to 43D. But before that, you have to maintain books of accounts. As per 145.1, mercantile cash, regularly follow, whichever you want to, but follow regularly. Mercantile system, follow accounting standard given by ICDS. That is CBDT. And if you do not follow these things, then there will be a best judgment assessment against you. And then we started with the discussion of classification of sections. Then we started that there are 4 types of depreciation. The first depreciation requires what? You need to be owner of the asset. Owner means beneficial owner. Legal owner, title, all of them are not relevant. In case of lease, lesser will claim. In case of hire purchaser will claim. And then this case law of ICDS, do not forget this. Use means active, passive, both. Because of extraordinary reason, if I am not able to use, you will get the depreciation, don't worry. Then the assets categorization, the rate of depreciation. Plant, machinery, 15%. Building, furniture, 10%. Intangible asset, 25%. Intangible asset does not include goodwill. Now, there are various rates. For building, 5% residential building. 40% temporary structure. For plant and machinery, motor vehicle by default, 15%. If it is in the business of running them on hire, then 30%. If it is purchased between 23rd August 2019 to 31st March 2020, purchased and used between this period, then 15% extra. Then mobile phones 15%, EPBX 15%, computers 40%, then windmill, professional books, aircraft, pollution control equipment, all 40%, ships 20%. And when it becomes half, when you acquire and put to use in the same year for less than 180 days, it becomes half. Exact 180 days full. More than 180 days definitely full. So if I acquire in this year and put to use in the next year, then it will always be full. Plant, then the definition of plant is given in an inclusive and exclusive manner. And the last thing which we did was you claim depreciation of block asset. You have to keep your amount column positive and your quantity column should not become 0. And last but not least, it is mandatory to claim depreciation. I hope you all are enjoying our fast track class. Take care all of you and make a habit of revising on a daily basis. Take care.